Thank you, everyone. Good afternoon. I know this is a tough gig because it's after lunch and it's on the last day of the conference, so thank you very much for coming along. So allow me to introduce myself. I'm David Backshall. I'm Vice President of Payment Partnerships for TerraPay. I've been with the company for 2.5 years, but I've been in the payments industry for more than 25 years, so I've seen a few things. Today, I'd just like to cover a topic around about cross-border payments and the world in which we play in currently today, why we see this as a really important sector, and what we do and some of the key trends that we're seeing in the space as well. So I'll just click on to the first slide. Some of the key things really that we've seen is on cross-border payments is about wallets, and this is really super important. The rise of wallets is really all about giving choice to customers and the way that they want to receive funds in their local markets. Wallets, as we know, has been really a key driver in the economy in emerging markets. When you look at Africa alone, it's a fragmented infrastructure. A lot of people don't have access to bank accounts. And the way that they want to receive money and pay for goods and services is through their local wallets. What really TerraPay has seen is really through connecting directly to those local wallets, we see a huge demand now. Not just in the first continent that we launched in, but what we're seeing across Africa, which by all statistics that I read recently is going to be the most populous continent by 2050, and how more localized wallets are being launched in those markets. It's also about giving the consumer choice. The convenience of being able to receive funds on their wallet, and being able to then utilize those funds, paying for local utility bills, paying for services. This is all really providing that unique convenience for those customers. So we see the importance of wallets and what they mean in a local capacity to our customers, and also extending that reach as well to a lot of companies that we're working with today and institutions to be able to reach all of that segment right across the globe in an instantaneous way. The fact of actually doing cross-border payments and making it as easy as doing a local transaction, will that ever be truly easy? And will that ever be a reality? Well, there's a number of things when we look at doing cross-border payments. Compliance and regulation is absolutely key. So when you look at doing a transaction from, let's say, UK to Kenya, you have to look at a number of different things. Compliance and regulation from the central bank. And we know a lot of, especially in the emerging markets, compliance changes. So what we look at is from a compliance perspective, we work very closely with the central banks, and we also have to keep on top of regulations. When doing a transaction from one country to another, it's absolutely key that the information that you send with the transaction that accompanies that transaction is relevant and is to the exact requirement for that country, and also what's to be expected to be received by the central bank. So working with local regulatory controls, making sure that we have the correct compliance is absolutely key to make sure that that transaction is frictionless. And that's not something that's easy to do because regulations change in markets. We've only recently seen in Nigeria, as an example, that the local elections that they had there in the country, and they had a new government formed, but then also they had changes in the regulations in the bank. So before in Nigeria, you could only do payouts in US dollars, rather in the local Naira currency. That has now changed with the new central bank governor, and local currency is now made available. Now, and that's a huge challenge as well, because you've also got to inform customers, and you've also got to let them know that these regulations have changed, but also as well implement those as well in terms of that money flow. And that's something as well that we have to make sure that we're on top of and we're ahead of as well. So part of this, and what this kind of diagram explains really is when you're doing cross-border transactions, when you look at traditional bank wires and how they're done today, they can take quite a long time to be done. And the reason of this is because when you look at banks and how they make those transfers, one bank in the UK, and you could say take any bank, let's take Barclays as an example. To do a payout in Australia or Nigeria, they have to have a cross-border agreement with that bank. They also have to have a local Nostra account set up with local currency. To do that across 190 countries is just not feasible, it's just not possible. So you have to have intermediary banks that intercept those messages. And every time another bank intercepts that message, there's cost and there's delay. So it's adding friction to that transaction. That transaction may need to get to a particular country in a certain amount of time. It may be an invoice payment, where the company's getting a discount if they make that payment in a certain time. It may be the fact that it's payroll, and that payroll payment needs to be made in a certain amount of time because that individual needs obviously to pay bills and has got commitments to pay. So all of these issues which you see here on the diagram have to be navigated by the provider. And this is what adds friction to cross-border payments. The challenge is certainly an opportunity. What we certainly see is simplifying global money movements, making a transaction locally, and we see that here in the UK with UK faster payments. We also see that across the European zone with SEPA. We see that there's friction currently at the moment, even with SEPA transactions, where you have SEPA and SEPA Instant, and we all know all banks are not on SEPA Instant currently today. So it still can take 3 or 4 days for a transaction in UK to reach a bank in Germany, for example. What we have done in terms of our whole cross-border network is to be able to provide a streamlined service with liquidity available, which cuts across all of the regulation and compliance, by actually managing all of that process to make that transaction available and liquidity available in those markets instantaneously. So to do that, you have to have a complete network of people that deal with every single part of that process, and of course monitoring those transactions as well. When you look at holding licenses in different countries as well, that also has a lot of complexity to it, because managing those licenses with the central bank gives you access to the ACH in those countries, but it also has to be managed appropriately as well. So everything we're talking about in terms of seamless, frictionless payments and doing that cross-border takes a lot of effort to be done across various departments, and particularly when you're looking at compliance and moving regulations in different markets. These are some of the huge challenges that we see in global cross-border payments currently today. The FX piece is also extremely important as well. Again, when you look at traditional bank wires today and you're looking at the FX from, let's say, GBP to South African Rand. You never know actually what the final payout is going to be in local currency. And that's what, as I kind of articulated before, was really talking about when you're doing traditional bank wires and you have an FX rate, GBP versus South African Rand, one rate is given, but the actual payout in the end is different because there may be corresponding banks that intercept that message, and every time they do that, there's a cost added to it as well. Again, looking at how we can change that is that giving an FX price up front on the currency swap is absolutely paramount because that drives efficiency in the FX cross-border payments. You want to know, clients need to know what that FX is up front, and they need to know exactly what the payout is going to be. Again, when you're talking about more retail transactions, you're talking about payroll, you're talking about invoice payments. If you're making a transaction and your actual payment is less than what the invoice is, then you're going to end up with an unhappy supplier at the other end. And again, this is all about driving inefficiencies in terms of cross-border payments. So this is really, really important because driving retail payments, especially for suppliers and invoice payments, is super important because it's the lifeblood of the company. If you look at some of the small businesses and some of the key challenges that small businesses have, it's actually making payments cross-border. The challenges that they have working with traditional banks today, and we see that, is because the costs are extremely high and the time it takes to execute the transaction takes quite a long time. So again, these are some of the key trends which we're seeing in global commerce that we're addressing those key challenges as well. Some of the other strategies that we have is hedging. We all know with some of the currencies that are there today are highly volatile. So some of the strategies that we talk about to our customers is hedging those currencies and working with their FX teams to be able to add value to their offering. For example, some of the customers we work with today, we provide a 24-hour hedge, even on some of the highly volatile currencies in the markets today. That gives them certainty on being able to deliver those transactions in a really cost-effective way. So working with the FX platforms and their treasury management teams, we've seen a huge amount of efficiencies and costs which have been driven down for those companies purely by utilizing the platform and the service that we have today. And we do that in a cost-effective and an efficient way. And this is all driven through the APIs that we have integrated with the companies as well that we work with. We touched upon a little bit before about the wallet opportunity. And this is something really where we see is a huge global opportunity that really we're only scratching the surface. One of the key markets that we've been working in right from day one has been Africa, as I said before, but also more recently in Latin America in the last 5 years. We see a huge opportunity there. If you look at Brazil in particular, they have had a service called PIX, which we're integrated to. The volume of funds which move through that is one of the biggest in Latin America. And certainly globally, when you look at the volume of funds which they move through that, which is on an annual basis around about $30 billion, you then start to kind of realize how important the alternative payment methods and the wallets are globally. If you look at certain markets as well in Southeast Asia, where you see, yes, Alipay, WeChat, and obviously the high usage of that, then you look at the Philippines and you see Gcash as well. Again, these wallets have grown from a small user base to a huge user base right across their countries. And again, it's fundamental in these countries, providing growth to those consumers to actually pay for those goods and services. So when you're looking at these trends and the changes that are happening in these markets, you will certainly find wallets really key to that growth, especially in that digital space. So for us, connecting and having that direct connectivity into those wallets is something that is absolutely key for us. Last year, we launched a partnership with Visa Direct, where we are providing our network to Visa Direct to connect to all the wallets globally that we have currently in our network. One of the other things that you see with wallets is having that direct connection into those wallets. When you make a transaction, the delivery of those transactions, and what we see currently, the stats on our network today, is 98% of all wallet transactions are delivered in under 10 seconds, okay? And this is providing local currency payouts through those wallets. So one of the very first transactions that TerraPay did on our platform was actually from a hotel worker based in New York who was from Kenya that needed to send $15 back home. And he did this through Western Union, which is one of our partners, and he did this to the M-Pesa wallet. But that $15 was absolutely vital for him to send back home to his family so they could eat that week. And we were able to deliver that transaction within 5 seconds. And we have that transaction, which is on our office wall. And that is part of the DNA of what we offer. It's that whole value add, but also the financial inclusion which we offer, again, through those wallets that we deliver directly those transactions in seconds. We touched a little bit on about regulatory and compliance. And actually some of the people that that work within TerraPay, they talk about compliance as an enabler. And people say, well, why do you talk compliance as an enabler? And the key fact really with compliance is if you don't have control and if you don't monitor your transactions of what you're doing, then you're not in control of your business. And this is absolutely key because TerraPay has been in business for nearly 9 years. And part of what we do and how we do things is making sure that everything in the whole value chain of what we offer is fully compliant. So where the source of funds are coming from, audit controls. We cannot afford to have any issues with funds being stuck or issues with central banks or any regulatory issues in local markets. So we have nearly 1,000 people that work within TerraPay, and our compliance team is absolutely central to everything we do. And also the fact that compliance can give us a heads up in the market on a local level. And that's invaluable because we can then advise customers on the changes, especially in the emerging markets, of actually what's happening. In South Africa, as an example, where you're sending money person to person, you have to fill out a SARB's mandate. Sometimes, from a regulatory position, those mandates can slightly change, and you have to make customers aware of that. So it's a balance of being able to look at what's happening in the regulatory landscape and how you can utilize that regulatory change as your advantage to your customers. all of this is developing and evolving at a huge rate. We're at 143 countries today. Managing all of those regulatory changes is a mammoth job and a mammoth role. But it's something that we at TerraPay take extremely importantly, and it helps us also build strong relationships with the central banks and the regulators in those markets. And where we currently have 30 licenses today, we have 15 more licenses in the pipeline as well. But what's important is also the pedigree that you have with central banks in other countries, and to show actually how you work with those central banks. And again, this is really key and important for us to be able to show our pedigree in that region. We only just recently actually got our EMI license in Italy, but it only took us 7 months to do that, which is actually the fastest in Italian history of getting an EMI license. And the reason why we got that so fast was because the pedigree and the compliance team that we had enabled us to get fast-tracked through the Central Bank of Italy. We all know that business today and how we move money is becoming more and more important. The partnerships that we have from remittance companies to business companies to licensed EMI companies to banks, for us is super important. It's about collaboration and partnership. We talked about the collaboration with Visa. We have some other very exciting collaborations coming up very soon. There'll be some press releases coming out very shortly. But we believe in global collaboration with partners. We want to be that network of networks to be able to facilitate those cross-border payments and be the glue that gets those cross-border transactions executed instantaneously. Why that is so important is because GDP coming into emerging markets is super important for those emerging economies. And where we see growth opportunities in markets, some of those markets we discussed like Latin America, we also see huge, massive opportunities in Southeast Asia, countries like India, which is, at the moment is supercharged at the moment with growth. There are some exciting opportunities on there in that market as well, with local payments, new wallets which are being launched as well. And we are really kind of, providing that network together to connect everything together to make transactions super simple, frictionless, and easy for those customers that we're working with today. We want to provide, obviously, our tech platform, and we have a lot of tailored solutions and new solutions that we're launching as well. But really, everything that we do is really driven by our customers and what our customers' needs are for those cross-border payments to take place as well. So, we ready to change the face of cross-border payments? I certainly am. Our team certainly am and are ready to do that. Anyone that would love to engage with us and have dialogue with us and talk about how to do cross-border payments, what sets us apart, what makes us special, we'd love to speak and have a chat with you as well. So thank you very much for your time and listening. My name is David Backshall. We're at booth 89. Please come and speak to us whenever you have a chance. Thank you.
I think we might have time for one question, if anybody has that. David, oh, one here. Thank you. Thank you.
Sorry, yes, hello.
David, you might need the headphones.
Right, you got me? Yeah. All right. Great explanation. Just to understand, are you, in terms of the international shift, from developed country to developing economy, what's that backbone? Is it kind of classic old school pre-shifting via SWIFT, or are you going stablecoin infrastructure? What's that rail?
Yeah. So no, we don't use SWIFT. So what we have developed is our own rails, and we also provide our own liquidity. So What we have done through that is, say for example, where we have licenses in those markets, we have directly connected to the ACH switch. So that gives us connectivity to all the banks in those markets.
But if you're, I don't know, you've got a corridor from the UK to Kenya.
Yep.
It's all going in that direction. How are you balancing effectively? Because you've got to actually move true underlying value internationally.
Yeah, absolutely. So we have liquidity in all of those markets. So 143 markets today, we have liquidity payouts. So for example, the messaging piece, obviously message, whether it's to wallet or it's directly messaging to the ACH switch, we do that. So the message gets there within nanoseconds, and then it's providing the liquidity for the local payout in local currency. So we have liquidity in all of the markets where we operate.
What happens if it isn't balanced? As in, you know, you've got an internet, you're going in and out of a given country.
When you say in and out?
Well, you're collecting and you're paying back.
Who said we're collecting? We're not collecting, so we're just doing payouts. So we're doing payouts in those countries, we're providing liquidity in those markets in local currency.
Okay, thank you.
Thank you, everyone. Let's big round of applause for David from TerraPay. Thank you very much, David.